Hello, what's up? Um, this is a new video talking about why it's taking longer for the stock market to have a correction. We notice that it's like something strange. Like we're not talking now about forget about crash. The market is not even getting a correction, and this is for me it's so dangerous, and I will explain why at the end of the video. But for now, let's start with this video. Why is it taking so long to have a correction and later a crash? So I want to take a look first about at one of the biggest investors in Apple's, which is BlackRock, and you can see they are the second largest investor here. So and the file date was February 5th. Okay, so let's take a look at BlackRock. BlackRock assets jumped to over 9 trillion. It was 6.5 trillion a year earlier. So what does that mean? It means that 2.5 trillion dollars was invested in this company. And why is this so crazy for me? This is more than Biden's stimulus package. Everybody's talking here that the market's going higher and higher because of the easy money. No, it's not because of the easy money. And I keep planning on making a video about comparing easy money and the stock market, but I want to delay it to the right time. So anyway, so $2.5 trillion was invested. And this makes sense, and this is why now we can see that just large tech stocks are rising. Their price is larger because of all of these trillions. What BlackRock will do with them? They need to pour them in the market, hoping that other people will put also more money in the market, and the price keeps going up. And remember here that BlackRock didn't just invest now; they invested a long time ago. So I believe their average price per share is very low. So they can handle the risk, basically. They don't care. But with this huge jump, I bet that their average price will keep getting just higher and higher to a point that they need to start considering selling. Here, hedge funds assets climb 3.8 trillion. This is also crazier than BlackRock. Why? I will explain in a moment. Now, hedge fund was in March 2020 $2.9 trillion, and now it's 3. So this is almost a trillion. This is 25% jump. That's telling you that there are 25% rise in the amount of people who are willing to put money on very, very high risk investments. And if you want to call it gambling as you wish. So this is also a crazy things happening. And this is explained now why the markets keep going higher, because all of this money is coming, and that means that there's just some people, they don't know what to do with their money. Maybe probably governments, who knows who else, maybe the Fed themselves, and they just keep pouring money in the market. Now, the other thing is, this is one part of the equation. The other part of the equation that nobody want to short the market. And actually I like that. Though I'm a big believer that the stock will correct, the stock market can't continue like this, but it looks like nobody want to short. Why? Because they don't want their head ripped off. And that's what's happening. That's what happened with, of course, the whole GameStop story. So you have from one side a lot of trillions of dollars pouring in the market, and nobody want to short. But the crazy thing is, we don't see that the market's strong, and this is the crazy part. All week, all this volatility, it couldn't break the all-time high. Okay, here also another veteran hedge fund just collapsed in Sweden. and they had billions of dollars invested. They had almost $4 billion. They are one of the oldest hedge funds in Sweden, and they're explaining that it's just the computer was not ready for this. They, of course, this is also the dangerous part. So why I believe all of this is so dangerous? This is so dangerous because basically what's happening is that we will just keep climbing the mountain to, at one point, um, there's nobody willing to put more money in the market. And this is when the whole collapse will start, and this is when crazy things will happen because people are putting their last dollar. Even rich people look like they're just pouring money to a crazy level. So, of course, we know when the price will drop. Very simple, when you can't find more buyers. And I believe it's getting closer and closer, but it will be slower. Why? Because nobody's shorting, as we saw here, that um, this is the lowest percentage in history when it comes to shorting. Nobody wanna short the market. I think is the lowest. See, the median short interest is 1.6% with all of these crazy high prices, and nobody's willing. This is just telling you 17-year low. Anyway, this is what I believe is just, we can see here that just is like, it's almost like suffering. We never had like this is this long from April, so almost 3 weeks, 3 weeks. April, nothing's happening. We can see here usually it's like trends, it's either higher or lower. So everything is telling you like things are fishy, and now I'm glad, actually now I understand why small stocks got destroyed, big stocks keep rising. Let's see how much. And it's very easy that investors, when they have the new quarter earnings and for these big hedge funds and asset management, and they can see that the profit actually is not as much as they expect, they will start pulling their money and things will start getting crazy. Okay, this is for today's video. Thank you.